Hi everyone, welcome back to another video from Indicator Vault. In this video, we'll feature the new Smart Liquidity Void Indicator for TradingView. What this means is we'll take a closer look at the Smart Indicator and show you how to use it. Firstly, what is a liquidity void? Liquidity voids occur when the price makes sudden jumps or moves from one price level to another. They can be identified as large, long candles on the charts. These large candles can be called market imbalances. These market imbalances can be caused by a variety of factors, including economic events, central bank policies, and geopolitical developments. As a result, it is important for forex traders to be aware of these factors and to monitor the market for signs of these imbalances, as they can present opportunities for profitable trades. The idea behind liquidity void is that these voids tend to be filled, be it in minutes, hours, weeks, or months. In other words, when there is an imbalance in the market tends to revisit the price levels at the imbalance. Next, let's take a look at the liquidity void indicator and how to correctly trade these imbalances in the market. After attaching your smart liquidity void indicator to your chart, you will notice that it identifies and draws market imbalances or liquidity voids on the chart. A candle triggers the formation of a liquidity void when its body is abnormally longer than the previous candle. Under settings, we first have the quantity of candles or period that the indicator looks at. Second, we have the levels for stop loss and take profit based on the ATR coefficient. Unlike other imbalance indicators for TradingView, our smart liquidity void indicator draws the liquidity voids and predicts whether the price will reverse or continue in the underlying trend after it revisits and fills their imbalance. This means there's a multitude of different ways to trade the indicator. Number one is trading the arrows. How the strategy works is very simple. You wait for a signal to be printed on the chart, waiting for the candle to close. Enter your trade using the recommended stop loss and take profit automatically provided by the indicator. Strategy number two works around the price tends to react to these voids. You will notice the drawn market imbalance or liquidity voids act like a price magnet and price likely to return and fill these imbalances or void, meaning you can combine it with other price action ideas and identify high probability entries close to order blocks. Next, we are going to incorporate additional indicators to build a complete strategy around the exit and exit signals provided by the Smart Liquidity Void indicator. The indicators that I currently have attached to my chart is the 200 period moving average, which serves as a baseline, and a relative strength index or RSI. For the RSI, we are going to focus on the 50 line. This strategy works as follows. For a sell or short, we wait for the candle to close and the arrow to be printed. Next, on the RSI indicator, check that it is below 50 and that we are currently in a downtrend. Simply enter your trade using the stop loss and take profit provided by the indicator. This doesn't mean that every trade is going to be a winner. Otherwise, they wouldn't have called it trading. However, following the simple rule of a 1 to 2 risk to reward, your account will grow exponentially. You would have seen on TradingView that most indicators just draw the liquidity voids in a simple and boring way. For example, single lines. They do no more than that. Neither do they try to locate an entry or exit or the prevailing trend. That is where the smart liquidity void indicator is completely different. You will see with fantastic accuracy that the indicator is able to predict the trend following after the filling of the liquidity void or the market imbalance. By combining the different indicators, we are able to further increase the accuracy of the trading strategy. We often get asked if these smart strategies can be used for trading cryptocurrencies and if it can be used on different time frames. The answer is absolutely yes. You can trade it on multiple time frames and pairs to identify as many setups as you can. Next, we are going to take a look at the second strategy featured in the video for this fantastic indicator. The following strategy works inside the liquidity voids identified by the indicator, as these works as magnets for the price. Let's take a look at an example on the Australian dollar, US dollar on a 5-minute time frame. You will see the large bullish candle has caused an imbalance in the market and the void has been filled. Remember to identify your tops and bottoms in the market as potential stop loss and take profit areas. You will notice after the imbalance was filled that we had a rejection, which was confirmed by the rejection on the RSI off the 50 line, and we could have entered a long trade with our stop loss below the low and aiming for the take profit line that is currently marked in green. By doing this, you would have a very wide stop loss and you would have a very safe entry. You would be aligning yourself with the smart money concepts and trading with the trend. So if you were to use the bottom as a stop loss, it would be 101 points or 10 pips, and there's a potential target of 185 points or 18.5 pips. The other option is to place your stop loss just below the liquidity void, meaning that you can have an extremely tight stop loss for a large risk to reward ratio. This same strategy works on any time frame, including the 1 minute for scalping. As you will see on the 1 minute, it identifies a lot more potential trades, and for this reason, you will need to wait for multiple confirmations. As you can see, it filled the red liquidity void to the left, and then the market changed from bearish to bullish. You'll see the other voids are all identified in green. You could have entered when the arrow was printed according to the first strategy, placing your stop loss below the low and aiming for 1 to 2 risk to reward. The other option is to follow price when it enters the different voids. For example, price made a double bottom inside the void with a divergence indicating that there would be a potential uptrend. For this reason, you could have entered placing your stop loss below the low and aiming for higher than 1 to 2 risk to reward. In this example, a 52-point stop loss and a 104-point take target. So first strategy is recommended for beginners as it's simple to use and has set rules that anyone can follow. Just wait for the candle to be printed and confirm the trend using the RSI. Use the take profit and stop loss levels provided by the indicator. The second strategy is looking at the way that price reacts inside these voids. As you will see, price filled the void more than once, showing us that this is a large buying area. You could have entered along with the trend, aligning yourself with the smart money, and I'm currently up 174 points or 17 pips or 1 to 4 risk to reward. by aligning yourself with the trend, you are able to trade with the smart money. And you can see the accuracy of this indicator is fantastic. So make sure to take a closer look at our website for this and other fantastic indicators that we have available. I hope that this indicator and strategy helps for your trading. Until next time, bye.